All right, now to the auto industry and why sales could be in trouble. Phil LeBeau joins us now with that story. Hey, Phil.
Hey, Joe, we've talked for some time about demand erosion and when we might see that within the overall market. And now you're starting to hear more people say, yeah, we're seeing it, or the industry is seeing it on the lower end of the market. LMC Automotive out with a new prediction in terms of annual auto sales this year, dropping the forecast from 14.1 million down to 13.8 million. And they say, look, it is on the lower end of the market where you're seeing that demand erosion. And it's easy to see why. Look at the three factors that are slowing down auto sales to a certain extent. Obviously, production is the driver right now. There's not enough to meet the demand that's out there. But for some people, the record high prices, now the average transaction price over $48,000, that's slowing down their demand. Rising interest rates adds to the monthly cost. And you've got low incentives right now. There are very few automakers who are out there putting out rebates that incentivize people to come in and to make a deal. And they should, because they don't have to, because they have enough demand in order to meet their supply at this point, their production plans, I should say. So the annual sales rate is expected to come in at 13.7 million. That's the pace right now. Most believe that it might end the year a little higher than that, but certainly you're increasingly hearing people saying we're not going to get to 14 million this year. So as you take a look at GM, Ford, and Stellantis, keep in mind that the new vehicle inventory, currently 28-day supply. In a normal market, it would be about 65, 70-day supply. By the way, that 28-day supply, just a little bit higher than where it was when we were at the low point in terms of the supply of vehicles. And then again, you have Tesla. Take a look at shares of Tesla. Remember, their sales right now are actually increasing for a couple of reasons. One, they're increasing production at the Gigafactory in Texas, in addition to what they're doing out in California. And those new IRA incentives, when they go into effect, they'll still apply for some people, or they will apply now for the first time for some people looking to buy a Model Y. So that is in Tesla's favor at this point, guys.
Interesting piece today here, Phil. I know probably read up on it. We're at 6%. I didn't realize that 6% of new vehicles. That's tripled. I remember it was 2%. But no one can get any of the domestics, it seems like. People are in line. They're not sure they're ever going to get one produced. So it's the demand seems to be there to transition, but it's just really hard to get the supply.
The demand is there. You're talking about EVs right now, Joe?
Yeah.
The demand is there. But the limiting factor is production. More than anything else, it is production, and it'll be that way at least for the next couple of years. And at some point, it is price. The average EV right now is selling for $66,000. Now, it will come down as you see more mass market models coming out, but does it come down to the point where you have people saying, I'm ready to spend $40,000 or $45,000 on a new vehicle? I have choices when I go electric, or am I still looking at probably going with an internal combustion engine vehicle?